Hello, it's Big Chads, and this is the Trading Encyclopedia Daily Education series on my YouTube at Chads Trading. You can find me on Twitter at Big Chads and Bitcoin Live, where I am a founding analyst. For today's lesson, we're going to look at another indicator called the RVI, or the Relative Vigor Index. It's another momentum indicator. We have other videos talking about types of indicators, momentum indicators, accumulation indicators, volatility, volume, but in this case, the RVI. So essentially, there's a complicated calculation. You can pause and read this on your own. Here's the calculation. Good luck if you're a math major. Have fun. But it's essentially just looking at the relationship between the high and the low and the open and the close to give you a sense of momentum, right? And you've got two lines. You have the RVI line, and then you have another line, the red signal line, which is a moving average of the RVI. So let's pull it up. Enough yapping. Let's take a look. You go to the chart, you go to indicators, you go to technicals, and you go to Relative Vigor Index right there. So here we have the Relative Vigor Index. And you have the green line and the red line. The green line in this case is going to be the RV line, and the red line, signal line, to 4-period moving average. Here's the input, a 4-period moving average of the RVI line itself. What do you do with this? Well, it is a centered oscillator. It's centered on 0, and it is not bounded, right? Unlike RSI. See how here you think, oh, the limit's 41. No, it went all the way up here. So it's an unbounded oscillator, which is good. It's good, especially if you want to use it for something like divergence. You see here, like on Bitcoin, you have the series of new highs in price, and you don't have new highs in the oscillator. That's one way to use it for divergence. You can also use it for cross-seed signals. For example, when the signal line, when the line crosses over the moving average, for example, the green line's crossing over here. In theory, that would be a sell signal. You didn't do that great on it. You have another one here. You didn't do that great on it. So you're not doing that great, using this as a crossing signal. But in theory, when you get the crossing of the signal line, that's supposed to be a trade idea. You also have the idea that when the RVI is above 0, you have positive momentum. When the RVI is below 0, you have negative momentum. So it's just like a lot of these other oscillators. It uses some formula based on highs and lows, or differences between the closes to give you some idea of momentum. And then it uses a moving average of that indicator, and then you have a crossing. So this is very similar to stochastic, to RSI, to like chalk and money flow. Any of these other oscillators that we look at, they all just calculate things in slightly different ways. You have to decide if you like it, if you want to use it, for your methodology. I don't, personally use the RVI, but here it is, the Relative Vigor Index. Again, you can pause and read this stuff on your own. I'll show you the calculation. You can pause right here and read this calculation on your own. This is the Relative Vigor Index, and this is part of the Trading Encyclopedia Daily Education series on my YouTube, Chads Trading. Find me on Twitter at Big Chads and Bitcoin Live, where I'm a founding analyst. Thank you so much, and I'll talk to you soon. Big Chads out.